Hey guys, welcome back to another video, and today I wanted to talk about gold and where I think gold could potentially be headed over the next few months to years, and the potential price we could see. I also wanted to talk about a potential trade that I think offers a pretty decent risk-to-reward trade. So right now, gold has actually broken past its highs that were set in 2011. We've actually completely just melted up these past few months right past those highs. And usually gold does tend to go up when risk is induced in the markets, and that's something that we've seen over this past year. There is underlying risk with this market that we're in, and that's probably the main fundamental driver as to why gold continues to melt higher. Usually gold will continue to melt higher regardless if the S&P is reflecting the risks associated with this market, and there's a good reason as to why gold will continue to go higher. You know, we do have a level of underlying risk into the market, so investors do flee to gold. That's a place where they're going to put their cash as a store of value. And right now, from a valuation standpoint, the market is completely overvalued. Hence why investors are continuing to flee to gold. But the main purpose of this video is kind of to discuss this chart and why I think you actually have a decent risk-reward trade here to actually potentially take a trade on gold futures here. So as I said before, we melted right past these 2011 highs. So now that we've broken over those highs, a way you could go around trading this is to actually buy around this area that we're at right now. We're kind of backtesting this breakout over those highs, and you could buy here, and you could use this wick low here as your stop loss. So you could have a stop loss at, let's say, 1862, buy here at 1930. You'd be risking about 70 points. Where I think gold could potentially head to is actually about 2550. I think there's a good chance we see that level. That's its 161.8% extension of its entire consolidation range here. Usually when a stock breaks out of its range, it's going to move to that 161.8% extension. You also have this 138.2% extension sitting at about 2250. So the way I think you go around trading this is you could take, let's say, a position here, and you could put your stop loss below that recent wick low, and you could probably trim half at this 2250 level and then ride the rest of that 161.8% extension. That way, once you come in that first supply zone and you take half off, you then get a risk-free ride higher. And after that point, you would probably raise your stop to break even. So I do think it's definitely possible we do see gold melt higher. I think we definitely see that 2550 level over the next year. Another way you could go around trading this would be to take a position in maybe some gold miner stocks. That would also be a way to go around trading this. There's a couple gold miner stocks I think you could potentially buy. One of the stocks I like here is NEM or Newmont Corporation. I think you've got a pretty good setup here. You've got almost a cup and handle kind of setting up here. Again, you wouldn't want to buy this quite yet. You'd want to wait for a break over these highs here, and then you put your stop loss below those highs, and then you'd look to ride this to its extensions. I think it's possible the stock could even see around 130 to 140 a share to attack its 161.8% extension of this range. I think that's a possibility, but again, you're going to want to look for a place to reduce your risk, so once we break over those highs and get a sizable move higher, you're going to want to look to take half off and then raise your stop to break even. That way you can't lose in the trade and you get a risk-free ride higher. Another stock that could potentially offer a good long-term position here would be Barrick Gold. Again, right now you really wouldn't want to buy this because there's not really a place to put your risk against. It would offer a very good risk to reward. But longer term, we actually broke below these long-term pivots we had back here in 2000, and then we broke back above those pivots. So usually when you break below a pivot like that and you break back above, that's usually a signal that you're potentially coming into a long-term bottom. And the purpose for breaking below that pivot was to run stops on people buying against this level, where then you break back above it and then you see a sizable move higher. I think it's possible this stock could potentially retrace all the way back to its all-time highs and potentially even see new highs. Again, I wouldn't really want to take a position here. It's right at its 50% retracement, which is usually a pretty big supply zone. If this does end up sliding to new lows, this would actually be the place where you'd usually see a rejection and then further slide. So you're going to want to wait for a better risk to reward here. Potentially, you could take a position versus these highs here at around 23 if we get relatively close to that. Maybe if we end up retracing back to that $25 level, you could take a position, maybe risking 2 points, and then you could ride this higher, maybe back to those all-time highs. But again, you wouldn't want to necessarily chase here at 29. It's right at that 50% retracement. That's usually going to be a pretty big supply zone. And usually that's what you're going to see on a bear retracement. So again, I would definitely wait here, but I do think potentially you could get a decent opportunity if this does retrace down to this $25 area. You could put a stop versus these highs, and then potentially you could ride this higher. This could be the start of also a zigzag trend in Elliott wave theory, where you have this first wave here, this third wave here, and then potentially we make a fourth wave down here, and then a fifth wave higher that pushes over those highs. But longer term, I do think that stock potentially has bottomed since it's broke below that long-term pivot, and then now it's actually back above that pivot. I think potentially we came into a bottom, and I think you would look to buy any dips here. So those are just a few examples of some gold miner stocks I like. I'm sure there's some more out there that have some great risk-reward setups. I just wanted to give a few mentions in this video to stocks that you could potentially look to trade due to this melt-up that we're seeing in gold. And yeah, that's kind of my views on these couple stocks here. I think potentially there's a decent buying opportunity in both of these names if you don't want to trade the futures themselves, but I do think trading the futures do offer a good risk-reward as well. Anyways, yeah, that's kind of my views on gold. I think you have a pretty good risk reward trade here. I think you can buy against that recent wick low, and you can ride this to the 161.8% extension, which sits right at about 2550. I know you can't see it on the chart, but it's right around there. You can see that 138.2% extension, and that's going to be where you're going to want to take half off. If you enjoyed this video or it helped you out in some sort of way, make sure to subscribe and leave a like. Thank you for watching.